So many people here thought British Hodl was crazy when I said that Bitcoin would be a 1% recommendation in portfolios. And my entire thesis since I first started thinking about Bitcoin in April of 2020 was that eventually you would see a 1% allocation in Bitcoin. Well, today, Fidelity has put out there that their recommendation for Bitcoin is, guess what? 1%. Now, you would have known this if you had subscribed to the channel. So if you haven't subscribed to the channel, will you subscribe now? Because Bitcoin is becoming a mainstream asset. Fidelity, in its most conservative portfolio, as shared by Matt Hugan. I hope I'm pronouncing your name right. Apologies if I'm not. Who's the CIO of Bitwise. Now, not only do you have, asset managers talking about Bitcoin, you got asset managers talking about other asset managers' recommendations about Bitcoin. So Matt is the CIO of Bitwise, who also has an ETF, and they basically put a snapshot out there, and I'll put it on the screen right now. He put a snapshot out there where Fidelity's all-in-one conservative fund is basically recommending a 1% allocation in Bitcoin ETFs. Now, what does that mean? That means that a 1% allocation across Fidelity's AUM of 4.5 trillion is a $45 billion purchase, which, utilizing the Bank of America bull market multiple, which again I've been talking about for months, so you would know that if you have subscribed. If you do know what that is, let me know in the comments what the Bank of America bull market multiple is. Let's see if you've been paying attention. So based on the Bank of America bull market multiple, that would, to add just that 1% allocation, would add $252,000 onto the price of Bitcoin today. $252,000 onto the price of Bitcoin just from a 1% allocation from their most conservative portfolio. Now, here's the interesting part. What's interesting is that their portfolios, obviously they have a conservative portfolio, a medium risk portfolio, a high risk portfolio, and it titrates up all the way to 3%, right? And a 3% allocation on 4.5 trillion is $150 billion from one asset manager alone. Now, this allocation is based on its Canadian website at the moment, but I'm assuming that it's going to be the exact same for the US. The only thing that's good in Canada that isn't good in the US is Trudeau. But besides that, we're talking about Bitcoin here. So this is going to be a universal allocation coming across all of Fidelity's advisors for all of their clients. Now, this is how passive flows start, because you're going to have pension funds that get Fidelity to manage their money, and they're going to say, hey, yeah, we need a conservative portfolio, and Fidelity's recommended conservative portfolio is 1% Bitcoin, which means every single month those pension funds are putting that money in, and every single month 1% is being allocated to Bitcoin. So the passive flows are starting. Again, I've been saying this for months. They're not here to screw around here. This is going to be a transition that's going to take some time, but you have got an opportunity here to get to your at least one Bitcoin, right? You've got to get to your one Bitcoin, and then whatever allocation you want to make, ideally based on the amount of wealth that you have. If you're around the average demographics of what watches my YouTube videos, then you've probably got most of your wealth in real estate. And the question you've been asking yourself is, how do I figure out how to liquidate some of my real estate to get into Bitcoin? Well, the point here is that you need to hurry up, right? Now, just because the price has gone sideways and that doesn't mean you need to be celebrating going, hey, look, nothing happened to the price. You need to count your blessings, because the Bitcoin price is based on supply and demand. It's the purest supply and demand asset we've ever seen, with absolute finality of scarcity, which means at some point that demand is going to start kicking in, because the ETFs are chewing up 2,000 Bitcoin a day. 2,000 net Bitcoin a day. Right? And if we just want to do the stupid thing and look at the new 9 ETFs, which I don't really like doing, I like looking at the whole market as a snapshot. But if you look at the whole 9 ETFs, within like 20 trading sessions, as a total, they've accumulated as much Bitcoin as MicroStrategy. Now, a lot of that is going to be funneling out of GBTC, but again, it's a slightly moot point for me, because I prefer looking at the whole market as a snapshot. But based on the whole market as a snapshot, it's going to take till May for all the ETF market to have enough Bitcoin to match MicroStrategy. So what we're looking at here is the transformation of Bitcoin from a risk asset to an asset, a must asset, right? It's going from a risk asset to a must asset in portfolios. And again, I want to point out, I'm not since I started my YouTube channel, I'm not talking about people who are anonymous on Twitter, people who are putting out models, I'm not talking about anyone else's prices. I'm talking about BlackRock, Fidelity, Bank of America, etc., etc. That's what I'm talking about. I'm talking about the institutions who are out here to get as much Bitcoin into their portfolio because they understand this. You think BlackRock doesn't understand that Bank of America put out a report in 2021 saying that the price of Bitcoin has a specific multiple that is crazy? Put that in the comments. Let me know what the multiple is, by the way. See if you've been paying attention. The highest multiple of any asset. You think BlackRock doesn't know that? You think BlackRock accidentally put out the report saying that the perfect allocation to Bitcoin is like 80%? You think they accidentally did that? They know exactly what's happening here, and now they're talking about a 1% allocation. Now, the most interesting thing is this. In the next 25 years, you're going to see 15 to 25 years, you're going to see a handing over of assets from boomers to Gen X. And it's going to be roughly $20 trillion. And that $20 trillion is going to it's going from a generation who has made most of its money in real estate. It's going from a generation who is conservative. It's going from a generation who is slightly more risk averse. And it's going to a generation that has made most of its money from equities, real estate as well, based on inheritance, but equities, etc., etc. And guess what they want? They're comfortable with a bit more risk. So that 1% allocation is a starting point here. Over the next 15 to 20 years, as that $20 trillion gets passed over to Gen Xers, these allocations for Bitcoin are going to go up because that audience, the managers of that capital, are much more friendly and much more comfortable with risk than the current stewards of that wealth. And that's extremely important to remember, because you're looking at a 3% allocation by Fidelity alone being 145 billion, right? A 3% allocation by BlackRock is $300 billion that has to be bought, that has to buy Bitcoin over the period of 5, 10, 15, 20 years. So this really is not an asset for a moment. It's not an asset for 6 months. It's not an asset for a year. You've got to look at Bitcoin as it going through its adoption curve. It is going through its adoption curve from an institutional perspective. And that's extremely important to realize, because you're not sitting here buying Bitcoin for a year. You are designing your portfolio for the next generation that you are managing. If you want your kids to have an opinion, you want your progeny to be relevant, you want your family to have a purpose, you're going to need some Bitcoin in your portfolio. And this is the opportunity to do that, because the price hasn't started running yet. When that price starts running after that supply and the sell sludge is taken care of, you're never going to be able to catch up to it. And again, as I've said many times, I think my journey on social media spreading this message is going to come to an end. Maybe as soon as this year, once Bitcoin breaches $100,000. So if you want to keep in touch after that, please check the description of the video, and I've put something in there to allow us a way to stay in touch after my journey on social media ends, because my journey is very limited. It's to get people who have assets to a minimum of 1 Bitcoin as fast as humanly possible, because this money is here. It's not only coming, it's here. Now you're going to start seeing passive flows come in on a monthly basis with the Fidelity portfolio allocation. Look, guys, if you had subscribed to my channel, you would have known that this was coming, because I've been saying a 1% allocation has been my base thesis for months. So the question now is, will you subscribe? Because ultimately, this is going to keep happening. The Bitcoin adoption phase for institutions is here, and this is only going to get stronger, faster, scarier for Bitcoin, because at the end of the day, there is only 21 million Bitcoin. It is the most finite asset when it comes from a supply and demand perspective. But ultimately, despite Fidelity agreeing with British HODL, and I'm not saying that, I'm sure it's been in their plans forever, but despite Fidelity agreeing with British HODL that a 1% allocation is what's needed, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.